Hey everybody, good weekend. Here is your market minute for Sunday, the 19th of November. Most of the time when I'm doing these market minutes, we find ourselves usually in a position where the price could literally go either way. So this is an example in early September where we got into this pullback and we started to see the price rally up into a consolidation. We said, all right, it could either go higher from here or lower from here. And I know everybody wants us to make a prediction to say, hey, let's go all in on the longs, or this is for sure going to fall down from here. But I don't see markets that way. And frankly, I think people that only look at one particular outcome from a market usually are wrong when it comes to that. So you've got to give yourself the option to be able to be flexible based on what you see the price actually doing. So to me, a prediction is less useful than the actual action which follows the price committing to a certain direction. So in this case, once we saw the price put in a lower high and fall down below this price level, then we knew what to do. And we had prepared for that, just like we had prepared for the price breaking above 4,500, which it did not do. So this week's market minute is a little bit different because the market has certainly committed to the upside at this point. We have smashed through the previous lower high and made a new higher high. So the market is now telling us that it's committing to the upside. We're very close to the annual highs for the year at 4,600. However, I don't think it's going to be that easy where we're just going to see the price over the course of the next couple of weeks just rip above 4,600. Now, weirder things could happen. I did not expect us to V-bottom from the October lows. So this has been a violent move. But sometimes what you want to see is the market move into more of a stair-stepping type of motion where range expansion, we get the big breakout, and then we spend the time to consolidate or digest that price level, and perhaps even pull down a little bit to build up the negativity before going on the next run. And this is what I'm hoping to see from here. So we've been consolidating now for 3 days. I think we need just a little bit more to deal with Tuesday's big breakout. So at this point, we could see the price do one of three things. We could see it continue to go sideways past the Fed minutes on Tuesday, past NVIDIA's earnings on Tuesday. Probably not going to happen. Also, don't forget we have Black Friday coming up, plus we'll get early retail sales numbers for the holiday season. So I very much doubt that we're just going to walk sideways the rest of the week. We could also start to see the price filling in this big gap. Lots of times these gaps provide big targets for the price to come down, build up the negativity once again. So a possible outcome would be some kind of negative catalyst coming into the market temporarily, filling this gap. However, the 4,400 level, in my mind, at this point has got to hold to reinforce the bullish outcome from this. So if we want the market to go higher, 4,400 has to hold. If we think the market is going to go lower, then that opinion will come in after the market breaks 4,400 to the downside. So if we break 4,400, then it starts to become more likely that any relief rally from here might just pull in a lower high and we start working ourselves lower from here. Either of these outcomes could happen. Right now, I give the benefit of the doubt to the bulls because of the strong performance over the last 3 weeks and a very high and tight consolidation. So this consolidation that we're seeing here right now is actually relatively bullish. But like I said, it wouldn't surprise me to see this gap filled sometime within the next week or so. But I want to see 4,400 hold for the bullish outcome. All right, guys, have a great holiday season. We'll see you in the next edition of the Market Minute.